What is going on, my friends? Josh Baldwin here from Mad Money Millennial. In this video, we're going to talk about Social Security, SSI, and SSDI benefits, and 7 massive changes coming for beneficiaries this new year, 2023. Social Security is our nation's most successful retirement program. In 2020, it was responsible for pulling nearly 22.5 million people out of poverty. And according to a recent survey from a national pollster, it is vital to helping just shy of 90% of retirees make ends meet during their golden years. Social Security is also a program that undergoes changes on a regular basis. During the second week of every October, for example, the Social Security Administration releases a fact sheet detailing the changes that will impact beneficiaries and the workers paying into the program in the upcoming year. You could do me a giant favor by tapping those like and subscribe buttons. And let's get into this breaking news update regarding the latest Social Security benefits information. This information changes on an almost daily basis, and it's my job to keep you informed with the latest updates. So make sure you watch every single video and watch all the way through so you don't miss out on the most current information. And without further ado, let's get into these 7 major announcements for Social Security beneficiaries that you will absolutely want to look out for. The first announcement to make is that beneficiaries will receive their largest raise in 41 years. This one is probably already obvious to most of you already, since your cost of living adjustments were already applied about a week ago, effective December 30th for SSI and January 1st for all other Social Security recipients. As you know, Social Security's nearly 66 million beneficiaries received a whopping 8.7% raise. Notice how raise is in quotation marks to reflect that this benefit increase is only intended to match inflation and isn't the same as a pay raise you'd receive from an employer, which would allow you to not only match but get ahead of the prevailing inflation rate. On a percentage basis, this 8.7% COLA is the biggest year-over-year increase in 41 years, and the 4th largest since the CPIW became the program's inflationary tether in 1975. In nominal dollar terms, it'll be the biggest increase in history. The average retired worker is estimated to see their monthly benefit climb by $146 in 2023 to approximately $1,827. But before breaking out the champagne, consider that a sizable portion of this COLA is being gobbled up by historically high inflation. Additionally, the purchasing power of Social Security dollars has declined by an unsightly 40% since 2000. In other words, Social Security's cost of living adjustment isn't all what it's cracked out to be. And this leads to our second announcement on our list. High-earning workers will have to open their wallets a bit wider. It's not just beneficiaries who are impacted by Social Security's annual changes. High-earning workers are going to be on the line for more taxable income in 2023. This year, Social Security's 12.4% payroll tax on earned income, which includes wages and salary but not investment income, was applicable between 1 cent and $147,000. The self-employed paid the entirety of this 12.4% payroll tax, up to $147,000, while workers employed by a company split this tax liability down the middle with their employer. The payroll tax provides Social Security with the lion's share of its revenue. The maximum taxable earnings cap, the $147,000 figure, adjusts in lockstep with the national average wage indexed most years. With workers enjoying substantial wage pricing power, the maximum taxable earnings cap will rise from $147,000 in 2022 to $160,200 in 2023. For the 6% of workers who bring home more than $147,000 in earned income annually, this change could translate into as much as $1,636.80 in added payroll tax liability next year. Moving on to announcement number 3. The rich are getting richer thanks to a beefier maximum payout. However, it's not all bad news being a high earner. Next year, the maximum monthly payout at full retirement age, the age where eligible beneficiaries qualify for 100% of their retirement benefit, is skyrocketing higher, Following a $197 per month increase in 2022 to $3,345, lifetime high earners will see the maximum benefit at full retirement age jump from $282 per month to $3,627. For those of you keeping score at home, that's over $43,500 per year. But in order to receive this maximum monthly payout from Social Security, 3 criteria need to be met. A worker would need to, number 1, wait until their full retirement age before taking benefits. Number 2, work at least 35 years, since the Social Security Administration takes into account a worker's 35 highest earning inflation-adjusted years when calculating their monthly retirement benefits. And number 3, hit or surpass the maximum taxable earnings cap in all 35 years considered by the Social Security Administration. In fact, only around 2% of workers end up qualifying for the maximum monthly payout at full retirement age. Number 4 is withholding thresholds for early filers are increasing. Social Security is a program that incentivizes patience. Retirees who begin receiving their benefits prior to reaching full retirement age, between ages 62 and 66 generally, are hit with a number of penalties. As an example, monthly payouts are permanently reduced for early filers. Additionally, beneficiaries can be exposed to the retirement earnings test, which allows the Social Security Administration to withhold some or all of recipients' payouts if they earn above preset income thresholds. For instance, early filers who won't hit their full retirement age this year can have $1 in benefits withheld for every $2 in earned income above $19,560, or about $1,630 per month. For early filers who will hit their full retirement age in 2022, $1 in benefits can be withheld for every $3 in earned income above $51,960, or about $4,330 per month. In 2023, these income thresholds are increasing, which means early filers can pocket more earned income without having some or all of their benefits withheld. Early filers who won't reach full retirement age can earn $21,240, or about $1,770 per month next year without any withholding kicking in. Meanwhile, early filers who will reach their full retirement age can net up to $56,520, or about $4,710 per month, before any withholding begins. The retirement earnings test is no longer applicable once a beneficiary reaches full retirement age. Alright, moving on to number 5. Disability income thresholds are climbing. The second week of October is also historically good news for the disabled workers and their families who rely on a monthly payment from the program. As of September, roughly 8.95 million people were receiving a disability benefit, 7.7 million of which were disabled workers. In 2022, non-blind disabled workers were allowed to bring in $1,350 in earned income without having their benefits stopped. But now that we're in 2023, these same folks will be able to generate $1,470 per month in earned income before their benefits would cease. That's up to an extra $1,440 in annual income. The earning threshold is moving up sizably for blind disabled workers too. This year, the monthly earnings cap before benefits cease is $2,260 per month. In 2023, it'll rise to $2,460 per month. Number 6. Wow, you guys are some great listeners to make it this far. Number 6 is the bar to qualify for Social Security benefits is moving up. Something you might not realize about Social Security is that you're not automatically entitled to a benefit just because you're an American citizen. To receive a retirement benefit, as well as survivor and disability coverage, you'll have to earn work credits. A total of 40 lifetime work credits is needed to receive Social Security benefits, of which a maximum of 4 can be earned annually. While this might sound like a lot of work, it really isn't. In 2022, a work credit was granted for each $1,510 in earned income. Thus, a worker who generates $6,040 in earned income will receive the maximum of 4 lifetime credits this year. This relatively low bar to qualify for benefits will be moving a bit higher in the upcoming year. In 2023, it'll take $1,640 in earnings to equate to a quarter of coverage, according to the Social Security fact sheet. To be awarded a full complement of 4 lifetime work credits, you'll need to earn $6,560 next year. As you can see from this graph, the taxation on benefits brought in more than $40 billion in revenue for Social Security in 2021. So when you're feeling down about your benefits, at least know that your life's hard work and tax dollars are truly making a difference in generating revenue for the Social Security program as a whole. And last but certainly not least, we have lucky number 7. Retirees are likely to see their tax liability swell. The last big Social Security change isn't something you'll find on the recently released fact sheet, but it is nevertheless pertinent to a growing number of retirees. Let's jump back in the past, and for my Marty McFly fans, Back to the Future. Back in 1983, with Social Security's asset reserves running on fumes, Congress passed and then President Ronald Reagan signed into law the last major overhaul of Social Security. The Social Security amendments of 1983 gradually increased the payroll tax and full retirement age, as well as introduced the taxation of benefits. Up to 50% of Social Security income became taxable when a worker's modified adjusted gross income, or MAGI, plus 1/2 of benefits surpassed $25,000, or $32,000 for a couple filing jointly. In 1993, the Clinton administration added a second taxation tier. This new tier allowed up to 85% of Social Security benefits to be taxed at the federal rate if the MAGI plus 1/2 benefits formula tops $34,000 for a single filer or $44,000 for a couple filing jointly. But here's the catch. These income thresholds have never been adjusted for inflation. As cost of living adjustments have naturally increased monthly payouts over time, more and more retirees are being exposed to federal taxation on their benefits. With a historic 8.7% COLA on the way in 2023, it's only logical to expect the tax liability of a lot of Social Security beneficiaries to swell. Alright, my Mad Money minions, I hope you found this video helpful. If you did, please leave a like. Comment down below any information you might have about your own Social Security benefits, and maybe you can help someone else out. And of course, hit that subscribe button and notification bell right next to it. Hitting that bell will make sure you get notified exactly when my videos are coming out and not a week or two later. If you are interested in investing, you can now get your 1 free stock by clicking the link down in the description. Alright guys, stay safe, stay hustling, stay warm, and I will talk to you all again soon.